quiet and respectful.
He certainly announces himself, doesn't he? I mean,
I suppose a little bit.
Everyone, the champ is here. Okay. All right. It is July 19th, 2023 for the Aladdin DAO community call. And we are going to kick things off here. We're going to kind of dive into, I guess, Clever, first of all. So the big news with Clever is that our growth proposal has passed. So it passed this morning on both ALD and Clever. So so the emissions cut, we'll start working on that. It won't be active immediately for this round of CVX voting, most likely, because that's tonight. So it'll probably be the next round is what you can kind of anticipate when we'll stop the bribes for Clev in Clev. So
yeah, and I mean with on the I think on the supply side, like cutting supply takes a little bit of time to percolate its way through the market. So, but it's a good strategic move, and we're going to, as always, keep a close eye on how everything is running, how Clever is responding, and again, ultimately, the name of the game here is we want to try to give some Clever some nudges into the growth direction here, and try to see if we can grow that locked CVX pie, which, as we've talked about before, it's really all about managing the discount on Clev CVX, because that's essentially that forms part of the fee that people take in order to borrow against their CVX. And so the better the farming rates on Clev CVX, the more svelte the discount is, and yeah, that seems like a good avenue towards growth. Again, just trying to position Clever as the best place to farm CVX, and I think we're basically there, but we can always be better.
Yeah, I'll be, every week I go and check the DAO CVX leaderboard, and I mean we're doing pretty good, but it'd be nice to see us just launch right up to the top of it. So hopefully,
yeah. Well, I mean that's the name of the game here, right? Almost everything you build has never been built before, and so we keep tweaking and adjusting to make it the most powerful thing it can be.
Absolutely, that's right. Let's hot rod this baby. Okay, so that's pretty much the only
that's Clever, yeah.
Update for Clever. So we'll move on to Concentrator. Big thing with Concentrator, we got a couple of things. So A curve on Polygon. There's been a few folks asking about this on the Discord, and we put up an announcement, but just to keep getting the word out there, if you have A curve on Polygon, there's a multi-sig address you can send it to on Polygon, and we will, the team will reimburse you back on Ethereum.
Yeah. So sorry, I'm gonna run my mouth about this for a while.
Yeah, do it. Yeah. Go.
Okay. So all right. So this is a little bit of a weird thing, because what happened, I think people are kind of basically aware of, is that multi-chain has kind of it seems to have blown up completely. And so multi-chain was the bridge that we had used to get A curve over to Polygon, and so we had a little bit of a gray area here and a lot of internal team discussions, because obviously multi-chain's issues were really nothing to do with Aladdin or with Concentrator, but because we had we kind of we discussed it internally, and we sort of made a judgment call that in this isolated situation, and because the liability was relatively low on Polygon, we wanted to offer this way to sort of make Polygon depositors whole in exchange for their A curve on Polygon. So the idea is, if you hold A curve on Polygon, you can send it to the Aladdin address, and then we will reimburse you on mainnet. The idea here being, multi-chain may come back or it may not, but if it does come back, then those tokens are still they're all still good, and that's why we're kind of making this choice to make those Polygon depositors whole. I would not expect this to happen in the future necessarily. We learned some internal lessons about how we want to communicate bridge risks and how we want to basically how we want to handle places where our protocol touches another protocol and absorbs some kind of risk from that. And so, we really could have gone either way with this one, but rather than have any kind of like adversarial situation with anybody in the community, what we decided to do was we're going to make everybody who was affected by this, we're going to make them whole, and then we've taken some we've got some ideas in the future about how we're going to be much more clear about communicating what risks you take to hold a bridge token, and also being clear around the movements of the Aladdin held tokens of the treasury, right? Because Aladdin itself didn't take a big loss on the multi-chain problem. We had repositioned funds when that started to smell off a little while ago. And so we probably we needed to tidy up our communication there a little bit. So that's the plan going forward, is that we're offering, there is a deadline, by the way, on this offer, just to make sure that it doesn't kind of stay open-ended, but we're offering anybody on Polygon who needs help or who wants to be reimbursed, made whole back on mainnet, we are offering to do that for free for people who have had that. And then in the future, we are going to communicate differently and probably not offer a similar amnesty program in the future, if I had to guess. But obviously, it'll be each situation is a little different. So cross those bridges when we get to them.
Yeah, it's kind of, yeah, like you're saying, a one-time thing, and it just kind of speaks to sort of, there's a reason why Aladdin products are on mainnet, and we haven't branched out a whole lot. This is sort of like a risk you're taking in DeFi when you do move out, and some other protocols have had to kind of learn their lesson as well. Like Frax actually had to build Fraxferry. It was such a big issue. So it's kind of one of those. Hey, we're all, if you're in DeFi, you're kind of like going through uncharted waters. So and we recognize that as well. So everybody, please be aware of sort of the deadline and the multi-sig address, and please reach out to us if you have any questions, or if you're unsure about what to do.
And then for everybody who is not on Polygon, as I said, this is a small liability. It's a sub 20,000 A curve that were affected in total on Polygon, and so this doesn't. It's a nice, inexpensive way to learn some very important lessons on our side, on Aladdin's side, for how to communicate these risks and how to handle these situations going forward.
Yep,
as much as possible.
Yep. Okay, and then so there's that. There's A curve on Polygon, and then we have AFXS. So that vote passed, and so we'll be migrating AFX from the CVX FXS LP to just single stake CVX FXS on Convex. So
yes.
we'll keep everybody updated on that one, as once the migration begins. I don't think anybody's gonna have to do anything if they want to stay in AFXS.
No, the migration will take place behind the scenes. Although, correct me if I'm wrong, Charlene, here, but the migration will be behind the scenes. You don't have to do anything. You're just going to suddenly notice that your reward rate jumped, which seems like a good. If there's only one way to know that it's happened, having increased rewards seems like the best.
Yeah, surprise increase in yield is I've never seen anybody really push back on that too much. No. But if
although it shouldn't be a surprise to anybody, since we've been talking about it for several weeks now.
Well, you say that, but yeah. So, but if you do want to remain in the LP, you will have to remove your funds from that and then put it into a harvester.
That's a good point. That's a good point, Kmet. So if for some reason you specifically want to be in that LP, that CVX FXS and FXS LP, you will need to move over to the harvester. Now the harvester is going to still harvest into AFXS or whatever. I'm not actually. Are there multiple harvesters for that one? There might be.
Don't know off the top of my head.
I'd have to pull it up. But the key thing here is that if for some reason you were in AFXS specifically for that specific pool for whatever reason, then you're going to need to pull out and head over to the harvester. but everybody else can just let it ride.
Yeah, looks like it goes into A curve if I'm looking at the right one. So yeah.
Okay.
Yep. So there you go. So there's that. And then last thing on concentrators. So
This is your thing. I'm gonna sit back.
yeah, so we've got a proposal. So right now Aladdin is basically we're sort of hopefully at the tail end of the bear market, and but we're basically engaging in sort of a growth strategy for everything. We're not going to just sit back and kind of just be like it's looking good, but so and that goes with obviously Clever. We just kind of like completed sort of the growth proposal for that one, and now we have a growth proposal for Concentrator that we'll be posting on the forum today. And so after the call, and essentially what this is a DAO to DAO revenue sharing proposal. So what our strategy is, what the team's been talking about and thinking about, and is kind of put together, is essentially a restructuring of the revenue for concentrator yields. And so right now, essentially the structure is, when the yields are harvested, there's the keeper gets a fee, and then 10% of the harvest goes is taken and split in half. So half of it goes to the treasury, and then half of it goes to VECTR holders, I believe, if I'm remembering correctly. Well, we want to restructure that revenue distribution from the 50-50 to 33-33-33, essentially, to where it's now you have 33% going to VECTR holders, 33% going to the treasury, and 33% going to DAOs that contribute to TVL in the protocol. So what this is basically an incentive structure so we can get more TVL in the protocol from major players in DeFi. I mean, you can almost think of it, as they put more money into various harvesters or compounders, it's essentially kind of like free money for them. And the whole thing is to incentivize growth in concentrator. And so, same thing kind of with Clever. You can kind of look at it as basically a short-term hit to, VECTR income, but it's kind of a no-brainer for a DAO. If you kind of look at concentrator and you're like, well, it's in, these are vaults based on convex curve positions, and we want to grow our position, and basically we're going to get reimbursed for just keeping our money on concentrator. We think it's a pretty good deal. So we're going to post it to the community forum for discussion. We want to get everybody's input to make sure that they understand it, and that it kind of helps us make sure that everybody's kind of bringing all the angles to us, so that we can make sure that everybody's thought of everything and kind of poked at it and prodded it. But yeah, so that's what's going to be going up today to grow concentrator. So look forward to that. We'll make an announcement, in Discord once it's posted, so that everybody can look at it. But yeah, please give us your feedback, and but we think it's a good deal. So
well, ultimately here, like there's a by way of background, Wiren has got has rocketed up. I mean, they were the originator of the sort of that style of yield optimization and harvest automation and stuff, being the sort of the auto compounder, the farm and dump auto compounder. And one of the things that they have always had, although it's not well publicized, is a similar kind of like program, DAO to DAO program, where you give for DAOs basically, who are bringing in like large amounts of TVL, they're rebating them some portion of the fees. And the overall benefit to the system to have vastly more TVL in the structure is significant, right? Like we talk about this a lot with concentrator vaults, how their performance is based on how much TVL is there. And really, the more TVL that's in the system overall, the more sort of will trickle down into some of the more marginal harvesters. And then as those ones grow enough TVL to becoming harvesting regularly, they become there's a snowball effect here, and ultimately, we're playing around both on Clever and on Concentrator. We're playing around with these revenue knobs right now, partly because neither one of these two products is in a like final state, right? And by that I mean they're both very, very small compared to where we think they can and will and should be. And so once the economics change completely if you can grow the TVL, grow the size of the protocol up to truly like serious levels, right? And so playing this growth game in our minds is it's the path to getting these assets and these protocols to where they should be, like to this sort of like promised land. And so go ahead.
Oh, I was just going to say the incentive structure that we propose is one such that it would grow TV, or hopefully grow TVL for Concentrator by orders of magnitude. So,
yeah, and that's always the that's always the goal here, right? So when you come by the forum, check out the proposal, but keep that in mind, right? For the big picture here, both of these products, both these protocols are nascent. They're so early that right now the only concern on everybody's mind, or at least my view, the only concern should be how do we grow? How do we grow and become and get the TVL to the level where we think it should be? And of course, everything falls from that, right? It's the same thing we talked about with Clever, which we're growing the pie. We're not so concerned about how we're slicing the pie so much as long as it feeds into that growth, right? That's like the king.
Yeah, absolutely. I think ultimately we want Aladdin products to be, I guess I've heard this term and I actually really like it, a base plate for DeFi, where if you've ever played with Legos, you get that base plate and you build everything on top of the base plate, and so I really like that term, and I think it's been used for several times. Curve is, you could think of Curve like that, and so Convex is built off that. But Concentrator, it's we want it to be integrated with all sorts of different protocols and DAOs, and so this is just a way to encourage and incentivize that.
Well, exactly, and one of the reasons I think that this kind of program can be so powerful, as you say, is making us so. Right now, anybody who builds on top of Concentrator has, of course, to factor in whatever fees that Concentrator charges, right? But if you come along with a DAO and you build up a product that is built on the underlying mechanism of Concentrator, and you bring enough TVL to really move the needle on Concentrator, now we're saying basically that's going to be a more affordable interconnect for you, right? And so part of the name of the game here is helping make the conditions for people to continue to build on us, right? The next layer can start to shop around and look. And we've seen a little bit of that, actually. We've talked to a lot of different protocols and DAOs that are integrating Concentrator and Clever in interesting ways. And I think that by lubricating that connection, right? By basically you give that a little bit of a rebate there to take a smaller slice of a much, much bigger pie. And in this case, I'm talking about just between Concentrator and some hypothetical person who's building on top of Concentrator. That becomes a really powerful avenue of growth via in what we've seen Curve do, right? Curve is growing by the fact that people are building on them and integrating deeply with them.
Yep. Yeah. So that's kind of sort of our what we're looking at for Concentrators. So like we said, we'll have the proposal up today right after the call, and everybody can take a look at it, comment on it, let us know what you think. So there you have it. And now we can move on to, let's see, next up on deck is Aladdin. We can talk about Aladdin and just sort of what's been going on there. So Kruger, do you kind of want to bring everybody up to speed on?
All right. So I see Tao's online with us. Hey man,
yeah,
welcome. Thanks for popping in, and drop it. Like if I stumble over anything, please jump into chat and correct me. But so I took a stab yesterday at just kind of summarizing the sort of the situation. A couple of a few weeks ago, Tao had done a bunch of great work and had put some proposals together, some discussion in the forum, and then a couple of very targeted proposals that both passed. And the two proposals that Tao had passed that are relevant to this discussion are to reduce the XALD rebase rate from 10 down to 5, and to introduce vote locking on ALD so that we can start looking at revenue distribution, and then also concentrating governance power of the governance power of Aladdin into those like long-term committed, that all of the benefits, the governance related benefits that we talk about with vote escrow system. And so both of those, the reduction of the rebase rate and the introduction of vote locking, both of those proposals passed, and the team sat down to start sort of like, figuring out how we are going to implement some of those changes and thinking a little bit more about that. And in the process, we came up with our own sort of perspective on the situation, which was, obviously these proposals came in and they were good proposals and they passed. But we've been thinking internally on the team that it might make sense to extend them even further. So start with what's already been discussed in the community, what's already been passed, and potentially push that even a little bit further. Not sort of changing what was already discussed and voted on, but expanding it and extending it. And so I know that Tao spent some time talking to Charlene, and we all wanted to get onto the same kind of page. Tao had posted a second proposal a little while ago about some further sort of changes to how ALD might work. So, like I said, yesterday I sat down and I tried to synthesize all of this, and here's what I think Aladdin is going to come back with. So we may come back and offer a single all-in-one proposal that encompasses everything of Tao's first proposal, but goes a little bit further. The goal here is to restructure ALD and bring it back to the forefront of the Aladdin ecosystem. ALD has been kind of like the redheaded stepchild here. We've been the last time that any serious work was done on Aladdin was in a completely different place and frankly had a completely different business. It was before we pivoted to actually building these protocols, that we would like to invest in, right? Concentrator, and then Clever, and now F of X. So the ALD tokenomics don't really reflect the modern sort of state of Aladdin. So we want to bring ALD back to the forefront. We want to harness the power of vote escrow to really make sure that the people who are voting with their ALD are ones who are very long-term aligned with the whole ecosystem. And then we also want to start rewarding those people with revenue from Aladdin products, which has been sort of the plan all along, is that we want the revenue, part of the reason why Aladdin owns such big chunks of the products that we build is to bring that, to have that revenue stream flowing from those products back into Aladdin, where they can be where they can be partially shared with the vote lock, like the ALD governance people who are providing governance services. So our expanded proposal is going to look like this. We're going to actually suggest that we cut rebase down to 0. That is to say, stop rebase altogether. I can talk about that in a second, but I'll just go through the high level stuff first. We're going to, and this is a big one, we're going to look at coding a maximum supply cap on ALD down to 150 million. So currently the maximum supply of ALD is something like 1 billion tokens. And we're looking at cutting that back to 150 million. Current supply is 140 million. So this would leave only a further 10 million ALD before we are at the supply cap, and it will massively cut down our fully diluted value. So the fully diluted value, of course, is based on these 1 billion tokens, which aren't minted, and in the current model wouldn't be minted for like 1,000 years or something. So So this new supply cap on ALD is kind of a big deal. And then the third thing is to go ahead and introduce vote locking in just the same way as Tao proposed, but it'll just be VE-ALD, since we won't need the X part anymore if we're not going to do rebasing. If rebasing gets disabled completely, we don't need to wrap. We don't need to have the staked version and then the wrapped stake version. It just really simplifies. It simplifies the naming. It simplifies the mechanism too, right? People don't need to understand this whole concept of rebasing and then wrapping the rebasing token and then vote locking the wrapped rebasing token. Like it'd be too ugly. So we are that's and as far as I can see, like there's lots of other proposals and discussions around the periphery, but this is the core of what we're talking about doing. So this is Tao's proposal pushed a little bit further and expanded a little bit more by the Aladdin team in a way to really help simplify ALD tokenomics and also take away this kind of boat anchor, which is this massive maximum supply of 1 billion. And so that's kind of on the proposal side. And then in addition to that, we're thinking about ways to actually kick off, how are we going to kick off ALD locking? And what can we do in order to create some excitement around that initial switchover of the tokenomics? Obviously, right now, Aladdin has some revenue that's coming into its share through Clever and through Concentrator. But that's obviously like, much like with Concentrator and Clever, we say that they're not in their final form, and we've got a long way to go to grow them to the level where they want to be. Well, obviously that's the same sort of thing is true of where Aladdin's Aladdin's got the ownership stake in those things, and they're still small, right? And so how can we make a little bit more excitement around the idea of vote locking ALD? And right now the team is toying with the idea of making a one-time distribution of part of Aladdin's share of F of X tokens. So right now the F of X token has not yet, like the token generation event hasn't happened. We have pre-sold in a public sale those FX tokens, and more on that in a minute. But the tokens don't actually exist yet. Now, the tokenomic structure has indicated that Aladdin will get 30%, which has kind of been the standard for Aladdin products. So what we're looking at doing on the Aladdin side is taking a share, maybe 10% of the tokens that are going to Aladdin, and actually just passing those on to anybody who is vote locking ALD by some deadline. So obviously all of this is going to be a one-time bonus to sort of kick off the start of vote locking ALD. And so that's the first thing, and that's potentially quite a big one. Obviously it depends on how many VE-ALD lockers there are, exactly how big that sort of grant is of FFX tokens, and obviously it's going to depend on where, if you're looking for a dollar value, it's going to depend completely on where the market prices FFX or FX tokens. So that's, obviously we don't know where that's going to be. We don't comment on that. That's just, but in terms of a legitimate ownership share of FFX, that's quite a lot, right? We're talking 3% of the total supply of FX tokens going to ALD lockers. The second thing that we're looking at is, as I mentioned earlier, there will be a $10 million ALD unminted. So current supply is 140. We're looking at changing the maximum supply to 150. That leaves 10 million sort of available to mint. We want to mint those out. And so, and sort of make the fully diluted value equal to the market cap. And again, just to kind of simplify the tokenomics, simplify the value structure. So we're looking at again, one-time rebate on ALD locking. So the idea is for every, and again, this is still notional. So we're going to be putting up discussions about this probably in a week or two, and start talking about it a little bit more at that time. But we're looking at paying those 10 million ALD, those last 10 million ALD back as a rebate to lockers at a rate of 5 to 1. So basically, if you lock 5 VE ALD, so that's 5 ALD for 4 years in the standard structure, then you get 1 ALD token back. Now, both the FFX and the ALD tokens that we're looking at giving in this one-time event will be vested, right? Probably over 2 years. It'll be a in the same way that the FFX tokens for Aladdin vest over 2 years. But they will represent a like guaranteed rebate. So again, in the 5-to-1 version, assuming that you get in on that, right? Because obviously the limit is 10 million ALD, and as soon as that's gone, then there is no more because we've hit the cap. But you basically looking at a guaranteed 20% in ALD terms back over 2 years after locking those. And then the last step is kind of the obvious one, which is we would kick off revenue sharing for VEALD, which would be 50-50 split with Aladdin. Everything that comes into Aladdin from these products, that's Concentrator, it's Clever, it's going to be F of X plus whatever comes in the future. And Aladdin is very much a protocol factory right now. Any revenue coming in through the Aladdin share of those tokens is then divided between VEALD holders and the Aladdin Treasury. And Aladdin Treasury is obviously very focused on acquiring useful ecosystem assets like Convex and Curve in order to help support liquidity across all of the different protocols that we build and run. So that's kind of it. A lot of words to describe what's actually pretty straightforward, which is that we've got a 3-step plan. We're going to turn off rebasing. We're going to cap the maximum supply at 150 and turn on vote locking. And then an implementation that includes an FX token bonus, an ALD token bonus. Again, both will be time limited, only people who lock before a certain deadline. And then, of course, enabling revenue sharing for ALD holders. And we think that putting that all together should make for a pretty like exciting and a pretty positive launch of this new tokenomic structure.
Yeah, when we've been doing a lot of internal discussion and thinking about it as well, and I know people have been sort of asking about ALD tokenomics revisions for quite a while, and so it's probably time to do it, and so it's a cool plan. We'd love to get everybody's feedback on it. Obviously, I'm not sure if we're going to be posting it.
So this is very much a sneak preview right now.
Yeah,
we're just talking about it in the call to give a sense of where we're at. We're gonna post for discussion a little later. We've got a lot of stuff brewing right now, right? I think the first thing is going to be the DAO to DAO concentrator proposal that you were talking about, KMX. Mm-hmm. We're going to get through that first, and then we're going to we're going to continue these informal discussions, and obviously looking for feedback from anybody on the line and any private discussions. And then we're going to drop this forum post. I'd like to say in the next couple of weeks, I would think we'll get this up onto the forum where people can have a look and bring their their opinions, right? Like ultimately right now, I mean, I think getting rid of rebase altogether in some sense, like rebasing was, in many ways it's a great mechanism. Like it's a zero gas way to distribute tokens to people, and I mean that's especially on mainnet, like that's very attractive. Everything that I loved about rebasing when we kicked off in 2021, it's kind of still relevant, right? Like even in the bear market, gas is not free and it's not even cheap, and it's going to go back to insane, as interest flows back into the Ethereum and crypto world in general. So like, I really do like rebasing, but this technique of rebasing with like at a fixed rate, kind of Olympus pioneered it, and then many other protocols like took that mechanism and adapted it for their uses. I think we had good reasons to do that at the time, but I think that at this point in time, it just doesn't quite match. It doesn't quite fit with the Aladdin protocol and the way that we're structured right now. Having that fixed token inflation rate and the super high maximum supply that was implied there as well, right? So I think that this is like a good move to get rid of the concept of rebasing, partly because if it's not an effective way to distribute revenue, which at this point in time we don't think that it really is, it just complicates the whole story of the tokens. It's just you have to stake it in order to get the rebasing revenue, and then the rebase is automatically staked. But then you can't do anything with the rebasing token. You have to wrap it first if you want to be able to hold it. Have the growth intrinsic to it, but still be able to like hold it in certain contracts, right? And like because the rebase doesn't work on a rebasing token, you can't just put a rebasing token into. So anyway, long story short is getting rid of some of the historical cruft from the ALD token system is, I think, a really good idea to sharpen up ALD and have it ready for the next phase here, and bringing it up to being that first class citizen.
Absolutely, yeah. Looking forward to that to discussions with everybody about it. So just FYI, that'll be, like Kruger was saying, that'll be coming out in the near future. But right now, we've got some other fish to fry.
And we do.
And that's this other little protocol I've heard a little bit about called F of X. And I guess we should chit chat about that. So the testnet's still going on. If
the Falcon testnet.
Yeah, I hope everybody's had a chance to get on there and check it out. I don't notice much different than from Stopolia, but seems to be going
Falcon.
okay.
What's interesting is because Falcon is a fork, and I did a little bit. I not nearly enough yet, but I've played around over there, and I went to the faucet. But it's a fork, so actually, your assets from mainnet will show up, and like your ETH will show up on Falcon. I found that very alarming because.
Did you try and bridge some CVX over to Falcon?
Well, no. The trouble was that I wanted to make sure that I was connected to Falcon and not still to mainnet. But when you look at normally when you go on your testnet, it's like, oh, I've got 50,000 ETH. This is probably not mainnet. This is probably a testnet thing. But when it's like with the fork, it's like that's my. I was looking at my expected ETH balance from the mainnet wallet I was using. Mm-hmm. And so it just kind of was, I just wanted to really triple check to make sure that I was connected to the Falcon testnet as I'm sending all my ETH to this testing contract. But yeah, no. So we're testing on Falcon. If you use MetaMask, it's very, very straightforward. I noticed with Rabby, I use Rabby and I mostly love it, but Rabby does not allow you to connect to testnet. So you've got to switch over and use, I don't know if Frame does or not.
Frame's pretty great. It switches over automatically. It kind of loaded everything without me even having to think about it, which is good and bad. But but for this instance, it was pretty good.
Yeah, and MetaMask did the same thing too. The switching over to Falcon was pretty easy, but just for your peace of mind, double check and make sure you are connected to the correct network. And obviously, the UI will not let you send transactions to mainnet. It forces you to connect to the Falcon network. So there's, I probably didn't have a real great reason to be scared, but I'm just a nervous Nelly, I guess.
I think that's probably good to be a nervous Nelly in the DeFi world in general. So. As multi-chain has shown us.
Yeah, that's right. I'm curious as a cat. That's why my friends call me Whiskers.
Yeah, if you were a hot dog, would you eat yourself? Yeah. I get these references.
It's so good to have somebody who gets your reference.
Yes. Well, yeah.
It's a simple question, Norm.
Saturday Night Live and The Simpsons, I've pretty much got down cold. You could throw in probably Seinfeld and Arrested Development. And
okay, I can't help you on Seinfeld, but I'm there on Arrested Development. So 3 out of 4 ain't bad.
Oh, brothers from another mother. Let's do this. Yeah, awesome.
All right.
Boy. Okay.
So, all right. What else do we need to talk about? So the Falcon testnet's ongoing for FFX.
The feedback form, keep sending us feedback on the form there. Let me grab it and post it in the chat so people can do that.
For sure.
And then, that's pretty much the testnet. It is what it is. What you see there is pretty much what's going to be on mainnet. So
and you get, we're gonna. the reason that we're, again, as we, just to put it in context from before, we were running on Sepolia, we switched over to Falcon because there's ST ETH on Falcon, because now that we're backing, we're the most recent configuration that we're looking for our mainnet launch is going to be fully LSD backed by ST ETH. So there's now, and that's changed the structure of our whole stability approach. And by the way, I don't know if people know this, but we have been making ongoing updates and refinements to the white paper, with another revision set to go out, I think, today, once I get my act together and make the last few changes here. And so if you're ever, like, if you want to understand the state of the art or the state of how this, we're expecting this to look when we launch on mainnet, we are keeping that white paper up to date, right? And in particular, you should be looking at, if you're looking at anything, you should be looking at the discussion around the stability mechanism. So we've talked about it in these calls, but it's described, I think, better, more clearly and succinctly in the white paper, which is mostly kept up to date. And there is a change log at the very bottom of the white paper too. So I try to make sure that anytime we make any kind of change to the text before we push that up onto GitHub, I make a note of what was changed down there, so you can get a quick sense of what you need to look at, what's new since you maybe checked out the white paper last.
Yep. And then I guess as far as timeline goes,
well, actually, before timeline, it's the audit, right? Like, yeah. the audit has been completed, but we were just, like, the final sign off is still pending.
Yeah, and so once we get that, we'll be able to release the audit report for everybody, and hopefully that'll be sometime early next week or something like that. But yeah,
I think so.
And then,
that's the plan anyway. Next week for the audit report.
Yeah, and then after that, we can start looking forward to the IDO second round and launch on mainnet. And so we'll obviously have more details as these things kind of like firm up, and we'll give everybody, like, plenty of heads up in terms of the Discord and Twitter, and making sure you've got your ETH ready to go. And if I need to pray over a node or something for various people to get their hands on the tokens or whatever.
Yeah, I think you do, like, you can make up like a pentagram out of sand, and the node goes in the middle.
Yeah,
and then
exactly.
I think there's the candles at all the points, right? I think something like that. It's been a while since I've read the technical docs.
Yeah, you need a young priest and an old priest or something like that. So, oh boy, but
right.
But yeah, we'll keep everybody in the loop on those things. But I mean, it'll be here before you know it. So
yeah, and just to be clear, like, we're talking on the order of a small number of weeks here for the audit report, and also the mainnet launch and the second round of token sale. So we mentioned on the last round that we are going to hold a second token sale round. We're going to have details for that coming out obviously before it happens, but we are, again, small number of weeks between now and then. So if you missed out on the first token sale, or if you got some and you decide that it's just not enough, you have another crack at this, at what we're calling IDO, at this second round of the token sale. And it's going to be relatively close to, in time to the mainnet launch. So again, details are going to be coming out over the next couple of weeks.
Yep. And that is, I think that pretty much is it, man. 10:01.
And it's 11:01.
We nailed it, man. Holy, yeah, that was exactly. A lot of stuff too. That was a busy call, man.
Yeah.
Lot going on here.
We nailed it.
As we planned, obviously.
Everybody's asleep, but we spoke for 1 hour and then stopped. We didn't stop, but we got through the content that we wanted to get through in that hour.
So, yeah. So
congratulations to us.
That's the main thing. We survived another week in DeFi. So it's always the goal. So, all right. Well, we appreciate everybody for I'll post some notes on the Discord.
And just Cam, it's like we appreciate everybody. I think that's you just stop right there, and that's the sentiment. I like it.
Yeah, we appreciate you. We're glad you're here. All right. That's it, gang. We appreciate it, and see you guys on the Discord and on Twitter and whatnot. Adios.
All right. Bye, all. Thanks for coming out.
Speak soon, guys. Bye.